So bear with me. It is January 9th, Tuesday. It's a Zoom review session. And how much can an accountant make? Depends how far along you are straight out of college. So typically straight out of college, for a big four firm, you might start at like 70,000. One of my alumni started at that. After you're 5 years out, you might be 120, 130,000. So it just depends on how fast you move up per year. All right. So do you guys have any general questions about the class? Anything? And then I've been reading introductions, and I just want to quickly explain what the business transfer degree is, make sure everybody understands it. So, I mean, that'll just take a couple minutes. And typically people have had homework questions or how the balance sheet works, accounting equations, and so forth. Okay. But if you have more questions, any other questions, please just put them in the chat and we'll add them to the agenda. Okay. First off, can everybody just introduce themselves real quick? I'm just curious. And you can put it in the chat. You don't have to do it out loud. Just, are you business transfer major, all of you, or not? Oh, Austin, that's a good question. So Ashley, Cameron, I don't know how to say your name, Chai Sung. Did I say it right?
It's Chai Sang. Chai Sang.
Chai Sing, okay. And Wilson, and so Chai Sing is business. Anybody else? Okay. Me too. All right. Okay. All right.
I don't know if I'm a business transfer major because I already did my AA some years ago, but that's basically my intent now is getting my stuff done so that I can transfer into business programs.
Cameron, do you have a bachelor's also or just an AA?
Just an AA from BC.
Okay. So you may not need a second degree. You may just need the classes so that you can transfer. Okay. In fact, I would encourage you not to get a second degree because you want to be as efficient as possible. Okay. Can you guys see my PowerPoint? And we will get back to the difference between operating and investing. Okay. Can you guys see my PowerPoint? Yes or no?
Yep, I can see.
Okay. I just want to go ahead to what does it mean in business transfer? Oh, do this. Well, hopefully I have it here. Maybe I don't. Let's see. I'm gonna look in the other file. Hang on. Stand by. Also business. Yay. Okay. I'm gonna steal it from another file. Here we go. Here we go. All right. This is the sheet I wanted. All right. So I just want to be real clear at this bottom part of the screen where we are, just because I feel like a lot of times not all students get a chance to go see an advisor, or if maybe you go once and you're still a little confused. So some of you are going to college for the first time. And so typically you're seeking an associate in business degree. It is not the associate in arts and science. That's a different degree. And I think, Cameron, that's what you might already have. Okay. So the associate in business degree, I'm in the business transfer program, and the degree is offered through our program. So why would you want an associate in business? Because there are a lot of required classes that you have to take to get your business transfer degree. And so those required classes, in order to transfer into like University of Washington, as a junior in their school of business, you have to have gotten a C or better in the prerequisite courses. And there's a lot of them. There's Accounting 201, Accounting 202, Accounting 203, Economics 201, Economics 202, and so forth. And so you also have to take your general ed, which you do with any degree. Okay, so you get that degree, and then when you apply to a university, you typically apply in like January or February of your second year, the year you're getting your degree. And that could be a different quarter for you, depending on when you're graduating. And you are able to transfer as a package. And so what that means is if you just had a few courses, they would have to go course by course, not just with your business courses, but with all your other courses to see if you qualify as a junior, or maybe you come in as a sophomore, you need more courses. This way, they don't even look course by course. They know you've satisfied it. So it makes the transfer process a lot easier. Once you transfer, maybe you go to University of Washington, Seattle, the Foster School of Business, or University of Washington, Bothell, or we actually have a satellite campus for Bothell here at Bellevue. And there's also University of Washington in Tacoma. Or a lot of our students like to go to Seattle U. Of course, it's more expensive, but it's a very popular school. Or Washington State, Western Washington, Eastern. And we have a lot of students who go outside of Washington State. I just found out one of our students got into Stanford, one of our business students. We have students that go to Columbia University, University of Texas, all over. So don't limit yourself to Washington State if that's where you're hoping to go. You get your 4-year degree. If you decide to major in accounting, in order to sit for the CPA exam, to get your certificate in accounting, they require a 5th year. So a lot of students get a master's degree in accounting or in any other field, sit for the CPA, and then go work in accounting here. Typically, they might even start early through internships and that sort of thing. Okay, so you don't have to get your associate in business provided you take all the required coursework. It just makes it easier to transfer. Okay, so that was what I wanted to tell you guys. So just because it gets confusing, and feel free to drop in any other office hours if you want to talk individually about the courses you've taken. We can always go back through that. All right. So let's look at the Canvas calendar. And this, can you guys see the calendar? I've got it up on the screen.
Yep.
So throughout this Zoom, I will constantly be asking you, can you see what I see? Because sometimes in Zoom, you forget that people can't see. So this is probably a little small on your screens. But I rely really heavily on the calendar. C minus testing is not passing. It is passing, but it won't let you go into the next course. So to get so Singh just asked, is a C minus passing in order to get the associate in business degree in your business classes? And that includes economics, statistics, accounting, all of those, English, the prerequisite required classes. You have to get a C or higher. You'll still, as far as, it's still a passing grade, but you won't qualify for the business degree, and the universities won't accept you unless you have a C or better. So, all right, so I use this a lot. I print this out, I make a paper copy, I print it out, and then I check it off after I've graded your assignments, okay? So I would encourage you to do the same. I know a lot of you don't use paper anymore, but it becomes a real easy tool to say, what's due, what's coming up. So I have graded syllabus quiz. I have graded introduce yourself. I haven't graded that yet. And then chapter 1 homework is due tonight. I haven't looked at that. And then tomorrow is the chapter 1 quiz. Okay. On Thursday, it's a little early for you guys, but on Thursday, there's an extra credit opportunity if you're applying to University of Washington, Seattle. And that is a practice exam, but I would say that's a little early for you guys, this first one. Okay. And then Friday's the last day to request a remote proctor. All right. All right, so let's make sure I got this here. All right, so then next Tuesday, Zoom, every Tuesday, chapter 2 homework is due. And then next Tuesday, you will be picking your companies for your project. And I have not posted the companies yet. I'm still looking at them for this quarter. And then we have another quiz on Tuesday. And then a week from Thursday, the business leadership community is doing their winter kickoff. And I would strongly encourage you to come. I am going to drop by and I'd love to say hi to you guys. And it's eligible for extra credit if you write a little essay. So the assignment is discuss 5 people that you met, et cetera, and write about them. All right. And there's free food. Okay. So you can kind of see the pattern here. We will have some special projects. We've got a Monopoly project coming up where you guys will play online Monopoly, or if you have a board game, you can do that. You'll do a peer audit of another person's Monopoly, make corrections if needed, and then you'll turn in your final Monopoly here. And then our first exam is here, 2:30 on campus in room C208, and there'll be a map here and parking information. Okay. All right, I just wanted to go over that. And if you have any questions about the calendar, let me know. All right. All right, so I'm looking at your questions. Investing and operating, I find them to be similar. All right, any other questions? I'll answer Austin's question next. Okay. So let me pull this up. Nope, we're going to do this one. Chapter 1. Here we go. I think the more we work with the balance sheet, Austin, the more operations and investing is going to make sense to you. But let me see if I can kind of walk through that explanation. Let's come down. All right, can everybody see my PowerPoint? Financing, investing, operations?
Yep, I can see.
Perfect, thank you. All right, so if you were to start a business, a restaurant, let's just use the restaurant example because everybody eats, right? Everybody goes to restaurants. If you were to start a business, the first thing you'd need to do would be to create a corporation that's separate from, let's say, Judith. I want it to be my restaurant concept, Judith's restaurant. I don't want it to be me as an individual. So to do that, I have to get a business license. I have to open a bank account, all of those things. I have to get what's called a tax ID number, all of those things. But when I open my bank account, I'm going to be putting money in there. And so that is called how you finance a business. And so financing, which you did not ask about, financing comes from 2 different sources. You either get financing from, you borrow money. So I'm going to start a business. Maybe somebody loans me money. That would be debt or liability. Or more typical, it's equity. That means I'm a stockholder. Whoever gives me money owns the company. So typically, if it's my restaurant, I'm going to invest in my own company first before anybody else does. Okay. So that's financing. That's getting the money in. Once you have the money, you're running a restaurant. So the first thing you're going to want to do is buy some land, build the restaurant, or lease the restaurant, rent the restaurant from somebody else. And then you're going to want to buy furniture for the restaurant. Maybe you need to remodel the kitchen. That's investing. Okay. So investing is big purchases that companies go into, where they say, I'm going to buy an asset, whether that's land, whether it's a building, or whether it's it's equipment. Okay. So when you're just starting a company, you don't usually have extra cash, so you're going to be spending your investment dollars on the restaurant, the building, the furniture, things that have a long life, a longer term life. If you have extra money, like Microsoft or Apple, they've been around for a long time. Another type of investment would be for them to buy stock in another company. But new companies don't have extra cash. They are just setting up their business. So they're investing in assets to buy so that they can run the business. Okay. Operations, on the other hand, are what we think of when we think of a restaurant. So I like dim sum. So I put a picture of dim sum here. And so what is operations? Think of it in terms of making a sale and making profit. Okay, so for example, how do you make a sale? Well, first you buy inventory. Inventory doesn't last very long. You have it and then you sell it. Inventory by definition is something you buy for the purpose of selling it to your customer. So in this dim sum business, you're buying food that you're cooking and translating into tasty dishes here. That's operations. It's running your day-to-day business. At the end of the month, you say, how many sales did we have in dollars? How many expenses did we have? And did we make any money? That's all operations. So expenses, short-term assets like cash, inventory, something called accounts receivable, which is when a customer comes by and we bill them later. We sell something to them, but they don't pay. They pay like 30 days later. So any expenses, short-term liabilities, sometimes a restaurant will call up and make an order and they will say, hey, drop off food tomorrow. And then once a month they pay it. So they say, I owe this money and I'll pay it in 30 days. So operations is kind of your scorecard for your business. What's your total sales? And then you subtract your expenses, and your goal is that you make money, net income. If, unfortunately, sometimes revenue is lower than expenses, and then you have net loss. You have too many expenses. Okay. All right. So our first statement, income statement, is all about your daily operations. Okay. And we have a couple examples here. So the first question I always ask, and I want you to ask it on your homework, is what type of business is this? So for chapters 1, 2, 3, and 4, all of our businesses are just service business. Okay. We're not selling product. Okay. So service could be house cleaning, could be computer repair, could be physical therapy, could be manicure, pedicure, but you're not selling the customer a product. You're doing something for this. So my example here is an outdoor guide service. So customers pay money and the business takes you on a trip. Maybe it's a hike, maybe it's rafting. Okay. So customers are purchasing a service and it's not a physical product. So let me just show you the income statement. Assume this company, Outdoors Corporation, started July 1st, 2018, hiking, rafting, and at the end of the first month, only 1 month has gone by, they've made revenue of $36,000, and they had all these expenses for $29,400. So in this case, sales is higher than expenses, and the company made net income, what you and I might refer to as profit. It's also net income. Net income's at the bottom, $6,600. Okay. Does that make sense to you guys? So this is all your operations. And I want you to, maybe you've heard language like the bottom line. What's the bottom line? That came from accounting, where we say, what's the bottom line? The bottom line is this company made $6,600 in July. The top line is your revenue account. That's what you charged your customers. That's what your customers paid you. And then these are all your expenses. Now, I want you to think about this for a service business. Typically, the highest expense is going to be salary. And sure it is, salary expense, 16,800. They have gas expense. Maybe they have automobiles where they take people on to a trail and they have to pay for gas, some supplies, lots of advertising, insurance, and then depreciation expense. We'll talk more about that in a little bit in that couple chapters. Okay. So revenue, the amount earned from sales, expenses, the costs incurred to generate those sales during the same time period. And of course, your goal is net income. We also call that in the black. In the black is what you want. If you lose money, we say that's in the red. Okay, and it's sad. All right. So as you do your homework, you're going to see anything here, service revenue, sales revenue. Those are revenue accounts. Here, where you see consulting fees earned, if you see a word earned or earnings, that's also a revenue account. Commissions earned. And then here we have a bunch of expense accounts. Salaries we've already talked about. Advertising, web advertising. Utilities would be for your phone, for your electric, that sort of thing, your water. Rent expense, obvious, supplies. And then travel, if your job involves some travel, maybe to pay for airline or hotel. Okay, when you see dividends, they are non-expenses. So do not put dividends on the income statement. All right. Okay, in the chat, I want you guys to put the answer to this. How is net income calculated? Put A, B, C, or D in the chat for me. And oh, direct message me. Yes, thank you. Thank you, Cameron, for direct messaging me. Good. You guys, revenue minus expenses. Yeah. All right. Can you guys do this one? Or do you want to do a practice one, or would you want to talk? Do you have other questions? What would you guys like? More practice or more? So what would you guys like? More practice, or would you like to move on? When doing the balance sheet, how do you determine the liquidity of an asset? Perfect. Okay, let's go on to balance sheet. All right. So you always start in this order. Okay. So income statement has to come first because we take information from the income statement to do the retained earnings statement. And the retained earnings statement is that weird statement that connects income statement and balance sheet. Okay. Then we do the balance sheet and cash flows. We're not going to do cash flows in accounting 201. That'll be in accounting 202. Okay, so remember this number, 6,600. And then we have the retained earnings statement because and it only has 4 lines, beginning balance, plus or minus net income. We add net income. If it had been a loss, we would have subtracted it, less dividends. Okay, ending balance. All right. That's dividends only lives on the retained earnings statement. Okay, so let's go to balance sheet. So here is the balance sheet for the outdoor company. All right. And we needed this ending balance in retained earnings because that's the balance we put on the balance sheet. That ties everything together. But let's take a look at the balance sheet. So what is the order of the balance sheet? It's going to be in something called liquidity order. And liquidity means how fast the asset, in this case, let's start with assets, how fast the asset turns into cash. So for example, Cash is cash, so it's always listed first, always. Typically, accounts receivable is next because accounts receivable needs to be paid in 30 days. Okay. Supplies, we usually don't buy years and years of supplies. We buy them short term, we use them up, we order more. Every time we buy something that we're going to use in-house, it's not going to turn to cash, but the idea is you're using it to create sales, which will turn to cash. So let's say supplies include something like computer paper. Well, you're using your computers to create a sale so that you can collect the money. So supplies would be next. But every time we buy supplies, we're using money to do that. And so we don't want to have all this money spent on supplies that we could use for other things in the short term. So nobody buys, 3 years supply of toilet paper at Costco. Why not? Because you don't want to tie up your cash and you don't want to warehouse all that toilet paper. Prepaid insurance would be next. It's usually a year or less. So prepaid rent, prepaid insurance would be next. And then equipment, land, equipment, buildings, they have a very long life. And so they go farther down on the balance sheet. Looking at accounts payable, notes payable, salaries payable, all of those things are pretty current, which means we have to pay them within 30 days or sooner. So we typically list accounts payable first, then notes payable, and salary and wages payable. Okay. And then stockholders' equity. Common stock is first, then retained earnings. Okay. All right. And then we talk about what are assets, things of value. I always say an asset has a future value. It has it has value to you in the future in that it's going to either become cash or it's going to help you create a sale, which is going to become cash. Liabilities are debts, things we owe other entities, typically suppliers. All right. Okay. So these are common asset accounts, and these are in liquidity order. So, and then the statement of cash flows, like I said, you're not responsible for it, but what you need to know is it has 3 subtotals on it: cash from operations, cash from investing, cash from financing. And maybe this will help you understand the operations and investing. Under investing, we purchased a van, we sold off some assets. In other words, remember, this is outdoors. They're not a boat company. They had some boats, they bought as equipment, and then they sold them off. Cash receipts, cash payments from your regular operations. And then under financing, we issue common stock, we borrowed some money, and we paid some dividends. Okay. All right, one more thing on the statements, and then we'll open it up for more questions. And I want to talk to you about the quiz because that's due tomorrow. So the income statement, I like the music. The income statement and the retained earnings statement cover a period of time. So remember, for the outdoors company, they had sales for the period of July, the whole month. The balance sheet is at a point in time. So the balance sheet says, let's go look at the balance sheet. As of July 31st, that was our balance. Income statement. Go back to the income statement. That's for a period of time. That date is wrong. That should say 7/31. Let's fix it. Okay, here we go. For the period of time, for the whole month. So we say for the month ended, for the period ended, for the year ended, any of those titles. But the balance sheet doesn't say for the month ended. It says as of. As of. And another thing I want to stress on these statements is always put 3 lines in your title. Line 1, company name. Line 2, statement name, income statement, retained earnings statement, or balance sheet. And line 3, the date. Okay.
Is that 3 lines for all of the statements?
Correct. So the income
Okay.
statement would say outdoor company in line 1, line 2, income statement, line 3, as for the period ending July 31st. So you need, it's so funny as a student, you don't realize how important titles are. But when you get into the working world, it's like, what is this document? What are you trying to tell me? So we need those titles on documents. Okay. So how are you guys with the accounting equation? Are you good? Can you write, what is the accounting equation? Direct message me. That should say equation. There's not. Direct message me in the chat. You can abbreviate. So, nope, there we go. Yes. So, Cameron, good. Chasing, good. Austin, that works. The typical equation, Austin, is assets equals liabilities plus stockholders' equity. But in this equation, how do you solve for stockholders' equity? What is it? What's
I think you subtract the liabilities from assets. So
correct?
25,000. Yeah.
So what's the answer?
3,000.
Right. All right. So would be the equation is, and so it'll be 25 equals. So you can do a practice problem and check your work. And it's not a coincidence that total assets, 89,000, equals total liabilities plus stockholders' equity. All right. So I want to look at the quiz. Has any of you taken the quiz yet? I don't know that it's open actually.
I took it this morning.
Okay, you get 2 tries. So let's, did you use both tries?
I did not yet. I think I got full points, so
Well, then
hopefully
you
I
don't need to
have
do the second try. It will keep your higher score. Okay, can you guys see Canvas quiz 1 on here?
Yep.
Okay,
Yep.
good. I'm always nervous that I'm looking at one screen and you're looking at another. All right. So how did the lockdown browser work for you?
It worked good for me, pretty much what I expected, I guess. I hadn't used it before though.
Okay. And you had used it or had not?
Had not.
Oh, good. Okay. I think it's a little confusing at first, honestly, but after you get used to it, I think it's pretty straightforward. So, okay. So you go into the quiz. It will force you to go ahead and download the browser. So you start chapter 1 quiz. Let me do student view. Let's do it like that. Oh, it's not going to let me do it because I haven't watched my videos. Okay.
Oh.
Let's see if I can do this. I'll do it. You guys do. Let's see. Okay, let's do that.
Sell products.
All right, done that. Next. Oh, it wants me to watch all of these videos. All right. Next. Next. Okay, now let's go to the quiz. Is it gonna let me? Yes, all right. So start the quiz to get to the page and then I already have lockdown browser, but if you don't, you just click there and then did it make you download it, Cameron?
Yeah, it guided me to the download and it was
Okay.
pretty easy. Like it showed me the steps.
So it's going to make you close before you'll let you take the quiz. You have to shut down everything on your computer. But something that I believe is still the case is for every class, you have to download Lockdown Browser. That is my understanding. That's what students told me last quarter. So I'm not sure quite why. Maybe it was an updated version or something, but it may make you download it again, even if you used it for another class. So, and then if you take the quiz, so I don't think it'll let me take the quiz without, but the questions, there's a bunch of questions and it'll, the instructions repeat for all the questions. It'll pick a random 10 questions. It'll be keeping track of your time. If you don't like that, you can hide it and then you can pick your answer and submit your quiz. Okay. How do you prepare for the quiz? What's the best way to prepare for the quiz, Cameron? Obviously, you can't use notes, so
I found the most helpful things to be the practice homework and your videos, and I took pretty extensive notes for your videos and did a lot of pausing and like worked the statements whenever you brought them up. But I did think the practice homework was even more helpful than the normal homework, I guess, because I felt some of the problems on there were a little more in depth.
Okay. So the practice homework, if you haven't done the practice homework yet, it is really helpful. I mean, it's designed to kind of get you over sort of the jitters of doing the homework online. And then you do get feedback on the homework eventually. So after the deadline, and you get a couple chances to do the homework, you will lose a few points, but other than that, it'll be good. So, all right. Do you guys have any other questions on the quiz?
I guess if we're ever using like a calculator for the problems, should we make sure that you can see the calculator on the webcam, or do you have advice for that?
The quiz should have a built-in calculator for you.
Oh, okay.
If not, let me know. But you can hold it up to the webcam and let me
Okay,
know you're
cool.
doing it. The way I set it up, you should have a calculator. Let's see. I'll go into lockdown. I have action passcodes. Well, maybe I don't. I thought I had a calculator built into this, but I'm not seeing it here. So hold it up to the camera.
All right, great.
You will need a calculator for future ones. So, okay. All right. Oops, I don't want that. All right. Balance sheet accounting equation. So chapter 2, we'll be starting that, and that will give you a lot more detail on liquidity as well, which will be helpful. And who was asking the liquidity question?
I did.
I was wondering that as well.
Okay. So chapter 2 has a lot more on liquidity and they just introduce a lot more accounts. So the way this class works is as we go along, you're just going to get more and more accounts. So by the end of the quarter, you will be knowing about 45 accounts. And it seems like a lot to me because you've got to be able to do a lot of journal entries and really be comfortable with the accounts. And so I'm just going to put this up again. And so I strongly encourage students to start building flashcards now. If you have access to blank 3x5 cards, cut them up, make them smaller, and then just put an account title on one side and then an account category on the other side and statement. So for example, If you put cash on one side, let's just do that right now. Maybe I'll use a big one just so it stands out. So if you put, I know you can do that in Quizlet and different tools, and maybe that's fine for you, but I just want to point this out that do that. So on one side you put cash, on the other side you put asset and statement, balance sheet. We're going to be, and leave enough room so we're going to be adding other things to this. So you're looking at cash and then you're saying to yourself, asset, balance sheet. What statement did these things go on? And this, students tell me that daily drill, and it's just like you were studying Spanish and you had flashcards. Okay, so now we start chapter 2 and we say, the whole chapter is about the classified balance sheet. So we did a very simple balance sheet in chapter 1, and now we're doing a more complicated one in chapter 2. And so what happens in chapter 2 is that we end up with lots of subtotals in our balance sheet. And so under the assets, we have 1, 2, 3, 4 categories. And under each category, we have the accounts. And these 4 categories are listed in order of liquidity. So on your balance sheet, first we list the current assets, and then those accounts, cash, accounts receivable, prepaid insurance, etc., we list them. So I just want to talk through just a couple things here before we go. We have about 4 more minutes. So the balance sheet, already talked about that. Point in time. What is the definition of a current asset? It's an asset that's going to be used up within 1 year, or something called an operating cycle, whichever is smaller. And typically the operating cycle is whichever is longer. Whoops, said that backwards. Okay, so typically the operating cycles are shorter than a year. So current asset would be a year or less. All right. So this is Cabela's. It's a retail department store that specializes in hunting, fishing, and outdoor gear. Has anybody ever been to a Cabela's? They're kind of crazy and fun.
Yeah, I've been there.
Yeah, they're pretty. It's kind of like going to IKEA. You stay for hours. But anyway, so Cabela's, this is just a little piece of their balance sheet. So the items in bold are the ones that we've already learned. So these are the individual accounts. Remember, cash is first, then accounts receivable. We haven't studied much with credit cards and inventories yet, but like prepaid insurance would be here. Okay. And then we'd say total current assets. Okay. And then we'd get all the way down. Let me just take it all the way down here. So here's a company. We're just,
Oh, I can't see your screen. I don't know if you're sharing
oh,
it.
so sorry. Okay, let's go back. I knew that would happen. Okay. So here's those, nope, share. How about that? Okay.
There we go. Thank you.
So here's those 4 categories. So I just wanted to talk about current assets today. So now when we build the balance sheet, it's going to be a lot longer, and it's going to have what we call different categories, different classifications. And the first one is current assets. And that means a current asset is an asset we expect to use up in 1 year. So here's Cabela's current assets section. Cash, accounts receivable, prepaid expenses, total current assets. So we're building a bunch of subtotals into the balance sheet. So I want to show you the full balance sheet here. Hang on, give you one. Give you a big long one here. Nope, I don't have it. I thought I had one to look at, but I just have a little one. So let's do the little one. Okay. So at this company, even though I said we have 4 categories under the assets section of the balance sheet, this company only has 2, and that just means they don't have the other type of assets. So there it is again, current assets, and then cash, accounts receivable, inventory, prepaid insurance. And then we stop and make a subtotal. And then the other category, property, plant, and equipment, there's equipment and something called accumulated depreciation. And there's a subtotal, and then you add them together and you get total assets. So as you read your chapter 2, it's going to give you a lot more information on the different classifications and particularly liquidity, and that'll be helpful for you. Okay. All right. And that's it for this week. We had some last quarter, the students had some questions about the practice homework and, just kind of the general, how do you classify an item? Is it an asset, liability? So chapter 1 is just kind of familiarizing you with different accounts and where they fall. Make a little balance sheet, that sort of thing. So, all right. And so that is what I have. Does anybody have any last questions?
With chapter 2, I guess, are the other learning objectives in the chapter, the analyzing financial statements using ratios and the financial reporting concepts, is that all kind of wrapped into the classified balance sheet?
We need the classified balance sheet because in order to calculate the ratios, we need, for example, we need current ratio, which is current assets divided by current liabilities. So you have to use the classified balance sheet to get to the ratios. So, all right, guys, I will see you maybe next week or anytime during my office hours. You do not ever need an appointment for my office hours. Just drop in. And if I'm working with another student, I might say, wait 10 minutes and either leave or come back, but you don't need an appointment. All right, I'll see you guys later.
All right, thanks so much. I'll see you next week.
All right, take care.
Bye.
You, bye.
Bye-bye, Ashley. Wilson, Austin.